Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A reactionary bullish harami yesterday after the previous session's second bearish black crow. The top of this market this time was capped, but only on a closing basis, by the bright red neckline, currently at 65.09, of the March to May 2020 reverse head and shoulders bottom. Now personally, I don't rate this one much, but it still managed to do so. The base of the action was on the old familiar dark blue broken upper time, currently at 63.82, of the dark blue showrunner for this market since last summer, the many times broken and many times repaired dark blue April to July 2024 bearish shift pitchfork, specifically the dark blue upper time. Further up, we have the now flatlining green short medium moving average, currently at 66.07. Recently we've seen a break higher from the late September to late October small descending wedge pattern, and as a result I had laid out a primary target X for this pattern up at 69 even, and a secondary harder to reach target X1 up at 73 even. This was further supported last week with a weekly key reversal up, which I pointed out at the time. This was the second weekly key reversal up we'd seen in the last 5 weeks. And the previous one was a failure. This week it seems as if last week's key reversal up is also looking like a failure, and thus targets X and X1 are now under threat. Now looking lower, below the dark blue broken upper time, we have the lesser Fibonacci line at 63.02, though this one does not look that supportive, and we would have to wait till the congestion down below between 60.02 to 60.64 to see any significant support. Now so far today, a lower open, still capped today by the bright red neckline, though not too keen as yet to try lower either. Spot gold, a possible inverted hammer pattern yesterday after the previous session's third bearish black crow. Now, inverted hammer patterns are traditionally seen as bullish reversals, and this may well be one, but I would be remiss to not mention that many in the technical analysis community, the TA community, look at this Japanese candlestick pattern, this specific one, with an opposing view. So please just be aware and be careful. It was also the third close below the first of the 50% Fibonacci lines for the September to October move at 39.96, but we had seen prices push up over this 50% Fibonacci line, making a higher high than the previous session, and that's not to be sniffed at. We also have overhead some other various Fibonacci lines at 39.73 and 39.47. Now, the next 50% Fibonacci line below is at 38.46, and that's for the August to October move. Plus, overhead we have the roundophobia of the 4,000 level. Now, so far today, a dip lower, halted by the lesser Fibonacci line at 39.06, and then a strong recovery over, well, it was over when I started writing this thing, making my little notes, just over the 4,000 level, and obviously the 50% Fibonacci line at 39.96, though we seem to be unable to stabilize over this pair just yet. But in case, we have further resistance overhead at 40.57 to 40.59, though it is not a major resistance, and then the next lesser Fibonacci line at 40.88.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.